Sunday night, so you already know it's time to get back in our bag and do what we do. Listen, guys, as always, I got a jam-packed video, so please make sure to
So
like, subscribe, help this video get at least
market
1,000
came
likes.
down a little
Without
bit
further
today.
ado, let's go ahead and dive into it. Now, I got a special one for you guys, okay? You know, every now and then, Coach got to go in his bag. I got to make sure the family is good. I got to make sure the family is eating, okay? Everybody eats with me, B. So, with that being said, I got 5 stocks under $20 that I need you to make sure you do something with, okay? I just want to help you guys get some money, okay? So I got a jam-packed one, guys. So do me a favor, lock in with Coach, okay? Listen, really quick. Everybody be in the Discord first thing in the morning. We ain't playing no games this week. We coming right out the gate. We're smacking the SPY and Tesla. Is that understood? If you understand that,
Tesla
say
looks good.
salute. Okay. And then everybody else consider joining the money team. Okay. We're going to get busy over there as we always do. Okay. So listen, guys, I'm
It's
kicking it
getting
off
cozy in here
for
for
today.
sure.
All right. With Run. Ticker symbol RUN. This is Sunrun. Check this out, guys. Currently sitting at $20.76. Everything I'm going to give you is at an affordable rate. Okay, you guys know I love my Metas, my Netflix, my Nvidias. You know what I'm saying? But some of that stuff, even I know, is costly, is high in price, and you can't really, especially if you're just starting out, you can't really get as much of it as I need you to get. Okay, but all of this that Coach got for you today, you should be able to at least pick one of these for me, okay? All of them will change your life, but if nothing else, at least choose one. Try to get between 100 shares and at least 1,000, okay? And I'm telling you, your life won't change, all right? So this first one is Run. Ticker symbol RUN. It's sitting at $20 for me, okay? Put that one on your watch list. You don't got to get it, but at least be aware of it for Coach, all right? What else Coach got for you? Man, y'all already familiar with this one. This one is Wolf. Ticker symbol WULF. TerraWolf to be specific, okay? Now, this one, the family, y'all ain't no stranger to this one. I already put the murder game down on this already, okay? However, I always tell you, when you find a good play, you can go back to the well time and time again until you can't. So we ride things to the wheel fall off, and then we on to the next one, okay? And especially with our fun plays, especially with these gems under $20 that I got for you, okay? So put this one on your radar. If you get this, again, what old Coach always tell you, all you need is a $5 move to double your money if you are learning to trade options. You don't have to, we don't need this to go to $30. We just need this at 15 to go to 20. And if it dip and come to 13 or 12 and it go to 20, you even making even more money. Let me know if that's understood, okay? Wolf, ticker symbol WULF. This is TerraWolf, okay? This one ain't new to y'all, all right? So y'all already should be familiar with this one. You already should have eaten off this one. Matter of fact, if you got this and made money off this, let Coach know down in the comments below, okay? And do me a favor, share this with at least 5 people, man. We need them on board learning financial literacy, learning how to invest and build wealth in the stock market, and then potentially participate in the 100K challenge for this year, okay? And really quick, everything that I'm going to present, you can buy shares of this. You can invest. Buying shares mean you're investing, okay? But of course, you can trade options. So I want you to think in terms of a two-pronged approach. What do you want me to do with these plays, Coach? I want you to buy shares. Even if you buy shares, you're going to do wonders for your life, for your financial situation, okay? But if you get comfortable enough, if you can put this play out a year, a leap, as well as get the shares, that's called good cooking, okay? What else Coach got for you? Lyft, ticker symbol LYFT. This one is sitting at $20.46. Now, we hopped in this around $12 or $14, okay? We have since seen this run up to $23. It went up to 26, and after hours, we not going to count that. It went from 12 to 23. Okay, now it's sitting at 20. Coach has a $30 price target on this that I need you to be along for the ride on. If you already made money with me in Lyft, let me know down in the comments below. For everybody else, okay, you need to get it for the first time. Those of us that's been in it, we're about to rinse and repeat, okay? So if it go lower, you need to do like this, okay? You need to be like, yep, I already told you this going to $30. So if it go lower, you need to, what I say, back up the Brinks truck for me, okay? Because I need you to buy as much as you can when the price is lower than this, when I already taught and told you and showed you the destination for where this play is going. $30 is our target for this, okay? You need to get this out to January 2027, ideally, so that I know you're in it and I know you're going to make the money that I advocate that can change your life, okay? Now that's Lyft, okay? So we got Run, we got Wolf, and we got Lyft, okay?
Okay, I think Lyft is interesting. They have to get the earnings. If you have comments and questions, YouTube's a place. But we're going to jump into a little breakdown right now. And get cooking here. So, yep. Go ahead and drop those comments if you like. Otherwise, we'll just get going. So, do want to make sure I have everything I need for this stock. Barrick. Gold went up a lot. Gold's coming down. It's finally time. It's been a while. For gold to go back up. So that's the idea. Nothing too outlandish. Okay. Basically, yeah, this is the important part. Reduction in trade tensions. So, yeah. All right. Let's go. This stock will surprise everyone. Trump's Earth stocks will make you rich. This is a gold stock. So coming off of the rare earth meeting with Xi, Trump and Xi have agreed there's no higher tariffs. Rare earth companies can still export from China. And what the de-escalation means is gold is not a safe haven. So there's not going to be huge tensions in the immediate future. Does that mean gold stocks are not about to go up? Actually, gold just came off of a big drop in price. It was on an absolute tear, 40% up. And now it's at a good buying opportunity, even as these trade talks concluded positively. So the ticker is B, Barrick. It's a gold miner. It's just the letter B. And it's not financial advice, but I think this is a good idea.
Sam Putnam.
All right, so this is the story, right? All right. That was really laggy, so we're going to have to do that again. Sorry. Some sort of lag going on here. But you know what? Maybe going in again is fine. There's one stock that will surprise everyone. Coming off of the Trump-Xi talks over the weekend, tensions are low. This is good. There's not going to be 100% tariffs. Rare earth stocks are still going to be able to be exported, and Trump's earth stocks could make you rich. This is not financial advice, but gold is coming off of a big drop, and it might be a buy the dip opportunity. This ticker is the letter B. It's Barrick. It's a gold miner. And let's jump into why gold might be the shock of the next few weeks. Could go up. I think this idea is as good as they come. Let's take a look.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here's a little bit about these Trump Xi talks. So this is the headline, right? They delayed these export controls and other critical minerals. Something like 95% of rare earths are getting to the US from China. So that's a big deal. That's why these rare earth companies sold off today over the weekend, because, you know, when we thought there was going to be a need for independence from Chinese rare earths, they skyrocketed, and now they're down a lot, and they just went even more down after those China comments came out. Now, if we look at gold, first off, this is the ticker B. But if we look at gold, it did pull back, okay? It had a breakout opportunity. It topped out. It actually squeezed short sellers a little here. So it looked like this was the top, and then it turned out we actually went slightly higher here and then faded off. So the fade was impressive, though. And if we look at gold stocks, so this was October 20th. This is October 20th. Well, 17th, and then a few days later, Barrick faded off as well. Now, interestingly, Barrick is holding. There's a number of other tickers that are also worth looking at, gold-related tickers. So WPM, it's not a miner itself, but it's in that category. BHP as well. Pretty significant sell-off in BHP holding up, but yeah, Wheaton selling off there, pretty much lining up with the gold top for sure, right? I mean, just double checking, right? This is the 17th, and gold futures, this is the 17th. So, and this is the real drop. So there are direct gold stocks as well. So if we look at FCX, and then these are the big ones, AEM and NEM. So FCX, not really doing so hot anyway. This is gnarly. These ones are most closely tracking gold, though. I think NEM for sure. And then earnings not great as well, which you'd expect with the price of gold going down, literally. And then AEM looking exactly like that. So kind of holding sideways, but not in the way that Barrick is. So this is impressive relative strength to gold. This is gold futures right here, which is holding up, but only as of the 28th, whereas Barrick is holding as of the 22nd, really. So if we look at the 22nd, again, that was basically here. So after the big unwind, Barrick found support, and there's a lot of buying here. So people definitely want to own this miner. There's enough time before earnings that there's the ability to get in. There's like a week. So you can buy for, a 10% pop is kind of what you look for in one of these, which would be, $3, right? So up to like 35 or change. And that'll allow you to sell some before earnings, and then you can sell out if earnings drops the rest, or if it goes up, you can trail with one of these lines, which is a moving average, which it seems to be respecting really well. So that's how you get a move up like this after an earnings, where you just hold one of these lines and you don't have to sell until it starts to break that. So that's what's going into gold. KGC is another one. I don't know that you have to look at all of these in detail, but I actually will look at these few. KGC, GFI, and AU are also really closely going to track the price of gold. KGC, AU, looking pretty similar. Barrick definitely holding up the best. And then as for what these guys have been up to, basically they have this dispute going on. So something to track, but it doesn't seem to be affecting their share price. This is from Reuters. And this has been going on for a couple years. So they launched these court proceedings about a year ago. And it looks like this is the whole point. They need to renew this license on this mine. So see what happens there, but that's relevant. Earnings are of course relevant in a week. This is a small investment. This is not that relevant. This is a while ago as well. And then this Nevada project, so used to saying NVIDIA, is going to be important if you hold this stock for a while, but I'm not recommending to hold this stock for a while. So yeah, guidance is going to be important with those Q3 earnings as always, along with earnings and sales. So that's the ticker. That's a little bit about it, but most importantly is the chart setting up and the comparison of the gold miners. So I'm going to keep these short and sweet. I think people seem to like them more. So like these videos, like this one if you like it. Hit that subscribe if you want a free course on how to buy stocks before they go up. I release that as a post for subscribers once a month. And if you want to work with me, head over to stockscommunity.com. You'll get free 15-minute Q&A drop in every day. And I do it at different times. So there's going to be a time that works for you. And this isn't financial advice, but I hope it helps. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay. Let's jump back to a little bit of Christiania.
All three of those out the gate are under $20. Let me know, can you afford $20? I often tell you guys, I see people trying to complicate the game of investing, making it appear like you got to have so much money, like it takes so much money. No, if I can show you some small, affordable plays, okay, I know what it can do, okay? For example, APLD, okay? Now this one was $20. But it shot up, so it's $34. But my point being, just like I'm telling you, Lyft gonna go to 30. It's gonna go way past 30. But I need you to understand the process. This one did the same thing. This one was $8. This was $4, and now it's $34. Okay, so put APLD. Matter of fact, have you guys made money with APLD? If so, let Coach know down in the comments below. All right, I want to know all about it. But this is going to be one of the plays over the next 10 years you guys can even eat off of this alongside, I remember Palantir. Okay, you're going to have that type of longevity with APLD. They are best in class of these $20 plays, okay? Then, oh, look at this one, SoFi, ticker symbol SOFI, okay? Now, this one was $4, then it went to $7, then it went to $9, then it went to $12, then it went to $20, and now it's them shot up to $29, okay? This is the same thing Lyft is going to do. Okay, so again, have you guys made money with SoFi? If you have, let me know down in the comments below. Okay, I want to hear all about it. But again, in terms of a long-term play, this and APOD will be some of the best two stocks that's in that range under $50, give or take, that can change your life. However, it's not a fast moving play like, say, a Tesla or a Palantir. It's going to be a slower moving play. So you at least got to know that for coach if you're going to play these, okay? But nevertheless, they will make you a ton of money because they'll hit every price target that I lay out for you with these plays from a technical perspective. Plus, guys, they have excellent leadership, okay? Meaning CEOs at the helm, board of directors, the whole nine. So fundamentally on point and technically they're on point, okay? Make sure you have these. What else coach got for you, okay? So look, I told you I wasn't going to hold you long today, guys. You get those plays. I'm sorry.
All right, let's tune back into Chris in a second. So
certain you're going to do.
Here we go. Wow. Okay. So this was recent executive order in April. Department of Energy announces $100 million to restore America's coal plants just 5 days ago. Okay. There's a lot going on here. So let's see. 10 comparable stocks to be. Okay. There we go. Peabody Energy. So the executive order did what exactly? That's what we need to know. Not sure what exactly it said. Okay. Trump's energy stocks will make you rich. There's one stock that is about to go up. The ticker is BTU, Peabody Energy. Trump signed an executive order in April supporting coal-fired power plants, even suggesting he's going to bring some of them out of retirement to create the energy required to power data centers. There was also 5 days ago a $100 million investment from the Department of Energy in coal companies. So in April, Peabody Energy went up significantly on that executive order. And right now it looks like Peabody, ticker symbol BTU, is also at a favorable spot and starting to move up, including on its recent earnings. So everything looks, all systems go. And this isn't financial advice, but let's jump into why BTU is a good buy right now, in my opinion. Starting with that Trump connection, for sure.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is a little bit about that executive order in April. So this is his whole deal, right? He's got the miners in the back. You know, he does the thing where he says, you know, he's mining the coal. So, you know, people say that's a meme, that's a metaphor, that's a whatever. No, well, I don't know. He literally is saying that he's going to possibly bring back this industry and save coal plants that were likely to be retired. So there was a situation in 2018 in his first term where he had a similar push and that didn't materialize. He said he was going to have his energy secretary direct regulators to subsidize coal plants. Regulators rejected the plan. So we'll see what happens. The whole big tech push might make this more possible. This is how much coal plants generate right now, 20%. Natural gas is pretty big. Natural gas is most likely to fill the gap between now and nuclear for these data centers. But if coal can help with that, the demand seems to be insatiable. So we'll see what happens. But this executive order is, I think, more than just symbolic. So this is the Energy Secretary, Chris Wright, and the Attorney General is also working on making sure that this is basically possible with the help of making loan options, I assume at favorable rates, available to coal companies. So this is the company BTU, and this is the bounce that was a good sign before, you know, earnings. Let's look at earnings directly. This is the earnings reaction. So little sell-off, but not really a lot of volume involved there. So maybe just some profit taking and then obviously some buying. So this is on the 30th, which is just on Thursday right here. And since then, earnings were good. The bounce lined up with this sort of spot right here. And also kind of lining up with back to November of last year. And you might be like, well, okay, yeah, this is voodoo or whatever if you're new to this channel. And it's like, actually, the reason these sometimes work, this sort of levels, is people bought back here and they probably sold most of them down here. But they know that this stock was worth this much. So when it holds this level, it is telling us that people are thinking it's worth more than that amount. And that's an important amount because it was worth that much basically up and down around that level for so long. So it's a big, you know, it's like winning a bet, you know, where the bet was sort of back and forth, and then suddenly, you know, everyone suddenly decides, you know, it's worth going all in on this company. So that's a really bad analogy. Chart looks good. Let's jump into essentially the whole situation for coal. It's not a rare earth, but they might be able to rig up some incentives related to energy independence versus, obviously, the environmental impact is worse with coal. The technology is older, although maybe it's more smooth than some of the other sources. Wind is variable, solar is variable. Some people don't like fracking for sure, which is natural gas. Not all natural gas, I think, but coal is predictable. So we'll see. But here's some contracts that have already sort of happened. 8 million tons of coal for 7 years to this Midwestern company. And this is the whole story here. Rising demand from data centers and AI. So this is kind of a microcosm of what's to come with more and more data centers getting built out and expanded. This is the $100 million from the Department of Energy. Restoring America's coal plants. So that's not a small announcement. That's a big deal. And then there's also the federal land announcements. Basically everything environmental groups are not happy about related to coal is bullish for these coal companies. It is what it is. So all we really need to see is that the earnings reaction was good. But just to sort of verify that the reaction is, rooted in numbers, the revenue beat consensus, the earnings per share was actually worse than estimated, but still went up. And then what's sometimes important, well, it's always important, but sometimes the sort of actual game changer is the guidance. So they did say that costs are expected to come down or below what they expected the cost to be. So margin might be higher. That doesn't mean they're going to guide for more revenue, but their margin being better does mean that the profit will be better, or the EBITDA or whatever they're going to measure it as will be better. So this is definitely good. I don't love diving into earnings too deep. I would rather just see the reaction, because if you're going to dive into Tesla earnings and super analyze it, I think it's over here actually, you're just wasting your time. This was the vehicle delivery sell the news, because it sold off and then it came right back. So this is a solid reaction. We'll leave it at that. If you like these videos, hit that like button. If you want to get a free course on how to buy stocks before they go up, that's available for subscribers. So I put that in the posts once a month. You can hit that subscribe button to get access to that. And if you want to get access to the Discord for $25, head over to stockcommunity.com, or you can hit that join button, which also gives you the videos before they come out to the public. So something for everyone.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. What else do we got here? Little Chris Satan. Where is he?
Wonders. Okay, now listen, when you are in this game with me, I want you to always be thinking buying shares first, and the ultimate goal is for us to get at least 100 shares. But guys, you don't have to have it all together right out the gate. Okay, you can work your way. That's what I do. I didn't come out the gate just being able to buy 100 shares. The goal is 1,000 shares. If I can get you to get 1,000, it helps you focus in and zero in on what you need to do. And this is how you really see the wealth in the appreciation of your stocks when they go up in price. But En route to 100 shares, I want you to get your first 5 shares. I want you to, again, celebrate the small victory of getting 5 shares. Then from 5 shares, I want you to get to 10 shares. And I want you to celebrate that small victory. See, too oftentimes I see us not even being appreciative of the journey. And I tell you guys every day, most people see the end result, but very few consider the journey. Before I had 1,000 shares of all of my plays, Netflix, Meta, I had to get 10 shares, 15 shares, 25. You get what I'm trying to say, guys? It was a journey, and I want you to know that along your own journey. Okay, that's why it's called personal finance. It's a personal journey. Coach just want to present the right assets to you so you know what to get. You know what you should be buying. You know, instead of buying liabilities, you guys are buying assets. And the things that I'm going to present to you guys on a daily basis are the type of assets that you want to have. Okay, but I want you to get your first 5 shares. Celebrate that small win. I want you to get your first 10 shares after you get the 5. Celebrate that small win. Be happy about it. But then be eager to get to 25 shares. And then when you get to 25 shares, you should be motivated to get to 50 shares. When you get to 50, you should be saying, I'm halfway to 100. Coach want me to have at least 100, 125, give or take. But at least 100, I'm halfway there. Boom. Now you get 75 shares. Before you know it, when you lock in, guys.
Lock in, guys. I like the motivation for sure. More shares, more commitment. Okay. Trump's drone stocks. As you can ask questions and comment over on YouTube. Unleashing American drone dominance. Prioritizing US-made drones. Yeah, we definitely want to see if they made any money from that. Five-year indefinite delivery contract, up to $1 billion for infantry. I don't know if that's related to drones. Department of Defense for munitions. Okay. Well. Unleashing American drone dominance. Here we go. All right. Trump's drone stocks will make you rich. This is not financial advice, but this stock, AVAV, received over $200 million as a payment from the Department of Defense in April. They are getting tailwinds from the Trump executive order on drones. I'll not quote it verbatim, but it's essentially unleashing the drone growth. It's focusing on American-made drones as a national security concern, and AVAV is American-made. So this is a $20 billion company. This is not a company that's set to sell shares to raise money. They do have up to $1 billion in revenue ceiling opportunity with the Department of Defense already, with munitions, as well as opportunities developing with drones. And they're 50% institutional owned. So it's not 100%, but it's definitely a vote that institutions want this stock. So I think it's smart to take a look at it. Let's jump into a little breakdown here.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is AVAV. This is the payment back in April. So this is actually for munitions. But they did get this contract. These are a little bit unclear, indefinite delivery, indefinite quantity, but it can go up to $1 billion essentially. So they're definitely very integrated with the Department of Defense and the US Army. This is the Trump executive order in June, actually. And that's directly from the White House, of course. So American leadership is very important in unmanned aircraft systems, UAS. The FAA is going to expand drone operations to enable all these beyond visual line of sight drones. So that's like serious drones. This also helps the vertical takeoff, Joby and ACHR. But in particular, AVAV has been referenced as a beneficiary there, and the chart indicates that this company is definitely important and could be a part of government contracting in drones. So 150% move up, big move up since the last earnings, and there is going to be some earnings uncertainty. There always is, right? You never know what earnings are going to be. This is a strange date for earnings, all the way in September or December. But regardless of when exactly is earnings, I don't think it's in the next week. So that's what you need to focus on. You can't just buy right before earnings, in my opinion, you're gambling. So there is something sort of firming up here. At the very least, you have compressed tight days. So you can sort of jump in, hop in, and maybe get a 10% move up, maybe a lot more. So it's expensive stock, but that's obviously a meaningless number, right? Because the volume is so low. It's 500,000 shares. So volume's a little over 100 million a day, and it should be enough, but also not so much that it barely moves at all. See, it moves about that much every week or so, about 4%. So, God, I hate ChatGPT sometimes. So I don't think earnings for AVAV are imminent. We'll see if Gemini can help us out. That executive order is a big deal. The contracts right here are a big deal as well. It shows this is a real company. And, when I mentioned dilution, when we look at the dilution for this company, there's really not dilution. This is obviously not true as well. So I think I'm just going to give up on these LLMs. No, it's actually really only for this company that they're failing hard. But see, there's no dilution really. And if you look for a lot of other similar companies, RCAT is another drone company. This one is definitely fast moving. It's a 1 billion company. And you can see here, there's definitely the ability to offer, to sell shares into the market. So you have to be a little more aware. They can raise money at any time. They did, twice just in the last 4 or 5 months or so. These are, they may be bullish offerings. The prices may be even above current price, but they can also just sell shares this way and just at any point just start selling shares in the market. So that's not the case for AVAV. I haven't dived into the Edgar SEC filings directly, but I trust that tool. It's made by extremely smart people. So this is not likely to have a big cratering drop. And if you look at RCAT as an example, I mean, this is just choppy. It's tough, you know. I mean, yes, there's big moves, like very euphoric moves, but also it's hard to get positioned because maybe you look for a breakout opportunity and then it stops you out. Whereas its pure AVAV is just a lot smoother, which, you know, if you've ever looked at your portfolio and it's down, it's up, it's down, it's up, it's just not a good feeling, right? So as far as other connections to drone companies, these are the other ones that are important. This is probably the biggest one, KTOS. UMAC is another sort of micro cap or small cap. So KTOS looks more similar, right? Smoother. You know, it's firming up. This one has earnings very soon, which is why I'm definitely not mentioning it. If this earnings is solid, that'll be, you know, positive vote of confidence for AVAV. UMAC, you know, kind of looks like RCAT. It's choppy, and it also has earnings coming up very soon. So this is definitely the one to watch, and we'll see when those earnings do come out. I don't think they're on September or December 5th, but I could be wrong. But I'm pretty sure they're not in the next few days, and I guess this is possible. This might actually be the latest reporter of earnings, even after. Yeah, no, I mean, Zacks is put it on there. I mean, AVAV is actually reporting earnings in the beginning of December 4th. All right, well, you know, sorry, I can't believe I talked down to the LLMs, but that's what I get for thinking I'm smarter than AI. So if you like these videos, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that once a month for subscribers. And then if you want to make $1,000 in stocks in the next 90 days, guaranteed, or your money back, head over to stockscommunity.com and you can try that Discord for $25. So if that's worth it, give it a shot.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, what you got, Chris?
You hit that 100, you start seeing, oh my God, I see why they be looking for 1% days. I see why they be looking for 2% days and what it do for your wealth. Then when you go past that and you really lock in and you start getting to 1,000 shares, guys, when I tell you it's game over, some days you can make 50,000, 20,000, 100,000 just off of the overall market having a good day and your stocks and the amount of shares you own appreciating 2%, 3%, stuff like that. That's how I want you to do this, guys. And I want you to then, lateral to all of this, sprinkle in that option for me. Sprinkle in that trading game for me, okay? Because that's how you supercharge everything, because options is 100-fold. And so the amount that the play goes up once you get the options involved in the game is, again, definitely on a whole nother level than just buying the shares. But I need you to know the process. That's how I got good. Buying
What's up,
the
Jay?
shares, it helped me understand. Like,
are you into
at,
stocks or what? What's your interest in this channel?
So then when I went to do options, I'm looking like, oh, I remember this range. When I bought it, it was here. It ran up here, then fell back down. Okay, I'm going to buy an option next time it come back down. And then I'm going to ride it back up to that number. And then the light went off. I said, let me dive deeper into this and figure this thing out, man. And that's exactly what I did, guys. And here we are 10, 15 years later. And it's been a beautiful ride. And I've been loving all of you guys as well on the journey. So listen, man, I won't hold you guys up. Put those 5 under 20 on your radar for me. Everybody be in the Discord first thing in the morning. The links and all that stuff will be in the description below. Everybody else consider joining the money team. Listen, guys, we make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like, subscribe to the channel. Make sure you guys grab some free stocks using my link below. And I'll catch you guys in the next one. Peace.
This is exactly what I wanted to watch. Charlie.
Folks, you better buckle up and get ready because in today's video, we're going to break down the latest on the market and plays. And then we're going to go on to 3 stocks that have crazy potential in November 2025. Each of these stocks has a beautiful business model, a huge proof of concept, a ton of massive tailwinds backing them up. I'll make the case for each of these as well as the risks and let you be the judge. And I'm going to put all the timestamps down below. But as always, if you're the one taking the ultimate risk, make sure that you're the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Also, last call.
All right. Let's jump into a little breakdown on a new Latin American banking play. Okay. I think J might be a bot. All right, here we go. Digital financial services and technology company. They have an investment product, buy now, pay later. It's in Brazil. Helps banking the unbanked. It's a fintech company, new holdings. Okay. So let's see what else they got going. What tailwinds are there for new? His earnings is on the 12th. So whatever that is, a week, a couple whatevers, days. Wow. That's crazy. Is this a Mexican company? I don't understand. Beyond Brazil, it's growing in Mexico and Colombia. Okay. Oh, false alarm. Here we go. All right. This one stock can change early buyers' lives. The potential is crazy for November. The stock is NU, New Holdings, and they are a fintech platform. So basically a way to get a bank account in an emerging market. The company is in Brazil. It's expanding into Mexico and Colombia. Only 49% of people in Mexico have a bank account. So the opportunity is huge if they can be the winner in that market, even though it's not as rich a market as the US or countries in Europe. The newness is very, very attractive. First mover advantage. So let's jump into a little bit about the company. It's not financial advice, but along with MELI, which is the Argentinian e-commerce company that recently went up a lot with the Javier Milei getting elected, there's some big opportunities in South America, and NU I think is a great one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is the company and you, and here's the deal. This is a lot of money, okay? But for these banking fintech companies, this is usually like how much gets processed through their platform. So their average revenue per active customer is $10 monthly. So it doesn't sound like a lot, but I mean, think about your banks, right? What do you pay for your checking account? Maybe $5 a month. Maybe you send some wires or something and you generate fees, but this could be reasonable. I mean, if they have 100 million customers, there's $1 billion of revenue right there. So I don't think they have 100 million customers yet, but they did have a beat on earnings in Q2. And this market is going to be huge. It is huge. It's just that now it's finally getting developed. So this is always a risk factor, right? Is there going to be some type of Argentina type situation, or Venezuela, even worse situation for Mexico or Colombia? This company's from Brazil. Probably not, but I definitely speaking without having any idea, right? Basically, they're like a Chime, or a Dave, these fintech companies that are always advertising like on the subways in New York and sort of deal. Or an Acorns, the Ashton Kutcher company. So here we go. They do have 100 million users. Okay. So yeah, so that billion of revenue actually could be real revenue. And this is this sounds like active, users. Like, I don't know what that activity rate refers to, activity once a month or what. But they definitely have a lot of growth, and we'll see what happens. But if they add 4 million customers in a quarter, I guess they must have been around for at least 5 years. So it sounds like this company is legitimately doing what they say they're going to do, which is take over Mexico with providing bank accounts. This cost is pretty low too, per month, $1 if they're coming in making $10, $11. So yeah, this all sounds pretty good. I mean, over $1 billion, deposits are 36 billion. Okay, so yeah, so this $1 billion of revenue does actually sound like revenue. It's not like, money that was transferred through their platform or anything like that. I guess Brazil is a massive market, so these customers are almost all in Brazil, and it sounds like Mexico is a reach goal, but very much untapped. Yeah, there is a lot of information in this financial results, but that's most of it, I think, without getting so in the weeds that we are basically, over-reading into this. There's the numbers for the new markets that they're getting into. But what's important, besides the chart, is it even worth investing in a company that's in South America? Unless you have like some type of emerging markets fund. There's going to be challenges where you're not worried about the inflation on the dollar anymore. You're worried about other currencies, and then there's just like interest rates in other countries. And I'm not even going to begin to pretend to explain to you why this is a slightly more risky company. But I will bring up SoFi and Melli, which are, SoFi would maybe be the US equivalent of NU, the lending platform, which is doing pretty well. And that earnings just came out and it's holding. So solid reaction. And then Melli, after that midterm win by Javier Milei, had a move up that was in here. And then earnings reaction is also sort of holding up pretty well as well. So everything looks solid. For NU, as far as price levels, this is an important level that it's approaching. I'm not saying that buying this as a breakout anticipation is like the best idea right now. Really what's working most often here is, waiting for earnings to happen and then getting in and looking for a solid move up. These are some slower movers that sort of, here the reaction actually came down and then started going up. But Amazon is probably the best idea right now. I mentioned that yesterday, but obviously I didn't know that there was going to be an NVIDIA OpenAI deal with them buying a bunch of NVIDIA chips. But the point is, earnings reactions are the things to buy right now. So you buy after the candle goes up. So that's one way to play new. Another way is sort of these stocks, when they come down to moving averages, they present buying opportunities. AVAV is one example, but B is another example from today where that's a buying opportunity. You might not get it right at the bottom. It's extremely hard, but if you can risk a little bit, a few percent or so, you can get positioned. So you have a cushion going into an earnings or going into a move. We don't know what's going to happen here, but gold could go up, which could make Barrick go up. So this is the company, NU. It's probably best to wait till after earnings, but you could get in anticipating a little push and selling half your position. So being early is definitely important. Having it on your radar is super important, and I think it has a lot of potential through November. So if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I release that as a post each month. And if you want the best idea of the day that I'll see you in the Discord tomorrow morning, you can try that out for $25 for 7 days. So head over to stockscommunity.com to give that a shot.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, back to Chris. Actually, no, now we're talking to Charlie. Talking to Charlie. Charlie's talking to us.
Our 25% off sale on Discord membership will be ending tomorrow night. Our Halloween sale is officially coming to a close. This is the last and final call. There will be no more extensions. We've got a crazy week coming up with a lot of earnings reports and a lot of catalysts, and so you're not going to want to miss our day-by-day briefings. And I'm going to be posting a lot of key prep, predictions, and alerts, so this is a great time to join. And so if you do want to join us, make sure to click that link down below before tomorrow night. Okay, so let's start with market context here. So we just had October. Are we heading for an up November? Well, let's look at the historical data. So November, on average, has been the strongest month for the last 10 years, and when adjusting for 20 years, it's the second strongest month historically. Now, what about years like this year that we've just had, where the S&P 500 has already returned more than 15% year to date by the end of October? Well, in those situations, November tends to average up 2.7%, and the median is up 2.5%, with markets ending higher 81% of the time. And then when you look at December, it tends to be slightly worse than that, but you're still averaging at 2% up, and the median at 2.1% up, with a win ratio of 71.4%. What about the overall odds of a year-end rally net? When you're looking at the whole bigger picture, November and December, you add in some volatility and so forth. What does the data say tends to happen in this kind of situation? Well, if you look at the historical data for the years where the S&P 500 is up like we are this year, well, the last 2 months of those years were actually ending green 95.2% of the time. The only exception was 1986, and even that wasn't much of a drop. Now, that doesn't mean that this year might not be the exception, but I think that if you're a bear, you have a lot that's going against you. Reasons why we believe the year end might be higher, well, historical data, CapEx
really
is heating
loud,
up massively, more rate cuts coming next year. Maybe we're going to get one in December. Who knows? The next Fed chair is coming in May, which is going to be very, very dovish. Whoever Trump's going to pick for this next term is going to be an even crazier money printer. The USD is melting, and the stock market is denominated in the USD. And then you just got a major US trade deal with China finalized. Now, what are some reasons why year end could be lower? Well, you could get a sudden Trump trade policy shift, which that tends to happen a few times every couple of months. You could get Powell signaling a change in policy, which is probably unlikely. He's already kind of dampened on the December cut, and that really hasn't done that much to spook markets. And then you could see tax loss harvesting, which usually has quite the minimal impact. And then maybe you get some sort of unforeseen black swan that is impossible to predict. But overall, bigger picture, it looks like very clearly the bears have a lot they're fighting against right now. There's a famous quote that says, "Don't fight the Fed." Well, right now the bears are actually fighting the Fed, the US dollar, the White House, trade policy drama de-escalating, unprecedented levels of capex, and 50 plus years of market data. Now, what's the practical takeaway? Is it that you should go all guns blaring into every stock because a crash can never come? Of course not. The practical takeaway is always be a cautious bull, understanding that long-term great assets at great prices are going to do very, very well. But at certain points, you're going to have periods of time where those actually become very discounted, sometimes crazy discounted, which allow you to buy in at even better deals. But those periods shouldn't derail your overall plan and your overall long-term growth trajectory. Step one, own great assets that you actually have conviction in, buy steady over time, dollar cost averaging, and relax. All I'm saying, buy good assets over time.
Sounds good to me. Okay, FLS, Flowserve, industrial pumps. I still have no idea what this does. I guess I have no idea. Guys, if you have any comments, questions, hop onto YouTube. Okay. Let's see what we got cooking here. Company is Flowserve, FLS. This merger was when? In June. So that was here. This earnings seems pretty transformational. Dude. There it is. Oil and gas, power generation, water management. Okay. Are they connected to any big companies? That would be good to know. Particularly any that we've heard of would be good. More public-facing, consumer-facing companies. But I'm not sure that's going to happen. Any we've heard of? I mean, come on. Come on. There's got to be something. Not really. Oh, great. This thing's going to be stuck on the screen now. Jesus Christ. So ridiculous.
And chill
Windows.
the
Like, what the fuck is going on now? Okay, well, whatever. Guess we're dealing with that now. Excuse me. Flowserve is the company. Recently part of a 20 billion merger. You have a dividend. God, I hate Windows. Like, what the hell is this, right? Can't open up videos. The media player doesn't work. All right, here's the guidance. Divestiture of legacy asbestos liabilities. That sounds good. All right, I think that's enough information. I guess we're just going to have ZipTrader in this stupid video. This is so stupid. God, I hate this. All right. There is one stock that is about to skyrocket. The company just had massive earnings and sales. It's coming off of a $15 billion merger in June, and they just got off their books $200 million of legacy asbestos liabilities. The ticker is FLS Flowserve. They do mechanical valves, seals, pumps, all extremely important for any type of large warehouse, any type of oil and gas installation. So there aren't a ton of companies with earnings reactions this good in Q3. So let's jump into a little bit about the ticker and first off the chart, just to get a read on how solid this move is. Not financial advice, but looks like a good spot to buy and risk off of this massive earnings move.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is a little information about the asbestos liabilities, $200 million that they're able to divest. And then as far as some projects, over $100 million for pumps in the Middle East. I don't know exactly if these data centers, AI, nuclear power contracts are basically emerging or not. That can be pulled up, but I think this move is not even necessarily related to that. Here's the move. Massive earnings reaction. If you look over the past year, it's up over this important level. And if you believe that an earnings reaction like this is indicative of future moves, well, you can just look at it, how much it held. So it pulled back to 68 and then is moving up from there. So you can still risk off of that 68 level, and it looks pretty favorable to do that. So that's the chart, that's the level, and I don't know exactly how fast it's going to move from here. You can see it's kind of slow moving in general, right? So this is a huge change of character for sure, but the most important thing is this level. So I'll get off the chart. I have this, my Windows is acting up, so I can't get rid of this thing. I hate Windows so much. Okay, so this is the company, Flowserve, and this is a big deal, 140 million in nuclear awards. Okay, so now it's all checking out. So as far as how much nuclear is actually going to get built up, could take a while, but this is basically the modernizing of a company that has been going sideways for a while. 20% increase in power bookings. So a lot of their, valve build out, flow control, pump work is for, well, it looks like nuclear power, which I'm not sure how much expertise they have in that specifically, given that, it's only recently that power and nuclear power has been so exciting, and that's because the tech giants need it. But we'll see what happens over the next few years with this company. I'm not saying this is a long-term hold, but it's exciting to see a move like this, and it's sort of a vote of confidence that nuclear is going to happen in the near future. So we'll see what happens, but this is the CEO saying that growth is directly led by AI, data center, and trends. And so, backlog, $2 billion. Backlog is always like is they going to actually get paid that or not? It's hard to say. But importantly, here's guidance. So the guidance was updated, and it looks like it's kind of similar, honestly. Everything pretty much looks similar. So I think that huge move was basically entirely on, well, the earnings were good, but also just the fact that the CEO started talking about this growth being led by AI and nuclear. So they repurchased $140 million worth of shares, but the bookings are super high, 1.2 billion, and this is what I want to zone in on. So this is $140 million in nuclear awards, and I guess that just so happens to be the same amount that they repurchased shares of. So I guess they just put that money directly into buying their own stock, which is generally a super good sign. You know, it isn't like a repurchase, plan, share authorization plan. Some of these like tiny startups, penny stocks, were saying we're going to put out a plan to repurchase our stock. It's like, no, they actually bought $140 million of their stock. Okay, so that looks like this number might be a little different than the repurchase. So this actually definitely looks real. 110 million in nuclear awards. And that's like a tenth, I guess, of their revenue, I believe. So now we're really diving into when we're looking at the 8K, we're really looking at the primary source. But I don't think we necessarily need to know exactly how important this nuclear money is to their overall business, but the market is definitely saying it's important. It is 110 million. And again, this is where that CEO quote is from. So that's the, I'm sure, exact quote right here. I guess they're also working on decarbonization investments, which may or may not matter for the Trump administration. But yeah, okay, so there's the same backlog and guidance as well. So they did have a dividend as well. So, this is just like the perfect storm of, a dividend producing company, a $1 billion revenue company. It's gone sideways for, well, not really forever, but for a while, at least this year. It hasn't kept up with the market, seemingly left for dead with the AI bubble, and now sort of a game-changing revenues with solid guidance going into the end of the year. So earnings per share beat, and that big segment growth is what led to that move. So pretty awesome. That's the idea of Flowserve FLS. If you like these ideas, hit that like button. If you want to get a free course on how to buy stocks before they go up, hit that subscribe. I release that once a month for subscribers on the post section. It's visible to subscribers. And if you want to try out the Discord for $25 for 7 days, head over to stockscommunity.com. See if that's for you. You'll see a couple testimonials from people who had great success with these ideas and who are using the Discord. So give it a shot if that sounds good.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, let's jump back into a little bit of Zip Trader. Let's see if we can.
Hell out. If
Windows
you're somebody
can
that's finding
recover
yourself
here.
freaking out on every level of volatility, this is the strategy that you should be focused on. I think 99% of people, if they focus on this first, they're going to be building a great foundation long term. And if they want, they can add in momentum trading, they can add in squeeze trading, spec trading, and so on and so forth, which does require higher levels of skill when it comes to risk management. Okay, we got to talk about the trade deal front. So China and the US finally signed a major trade deal on November 1st. Now, if you remember fund manager and media expert rhetoric in April at tariff crash lows, you could see how far we've come. Back in April, when we were screaming buy, 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 a lot of fund managers and experts yelled that we were going to see the complete decoupling of trade globally and that was going to permanently derail the stock market. They said buying the dip would put you on the street, leave you bankrupt. The media parroted this mindset for very, very long periods of time. And sadly, many people sold out of their 401ks with massive penalties. They locked in huge losses. They permanently left the market, and it was all because of this very aggressive financial media fear-mongering. And anyways, now it's November, and not only have markets rebounded and built well onto all-time highs, but now we've got the major US-China trade policy war behind us. So what are the benefits of this deal from a stock market standpoint? Well, for starters, this should create an even bigger risk-on sentiment boost, which could mean a much broader market rally, not just the big tech names rallying, but a lot of the companies and different sectors that were destroyed by tariff uncertainty. Well, a lot of them might come back soon. By halting new tariffs and easing export tensions, the deal reduces geopolitical risk premiums. That means trade-weary capital might be set to rotate back into cyclicals and growth as trade war tail risk fades. Expect net relief rallies in indices like the S&P 500, the NASDAQ, and the Dow Industrials. Volatility VIX often compresses after such truces, fueling short-term risk-on momentum. There's also the supply chain relief, which is going to cause a lot of relief for manufacturing, tech, and EV stocks, quite crucial for semiconductor plays like NVIDIA, AMD, SMCI, and Intel, EV and battery producers, industrial machinery plays. You're also going to see an agricultural and commodity rebound trade. This is going to mean energy and AG agricultural plays are going to rise, and energy names are going to benefit indirectly from improved global trade flows and freight demand. The more you see trade around the world, more energy demanded, and the more energy prices go up, and the more these energy names, especially the efficient ones, see inflows. Number 4, you're going to see confidence and liquidity surge, even higher than it is today, which is going to result in even higher corporate investment. Reduced
Sounds good. Energy is definitely the play right now. Hexcel Corporation. Okay. Talk similar tickers to HXL. Okay. $500 million incremental existing. I don't know. We don't want existing. Defense space is up 13% year over year. Revenue. $450 million revenue. Beat analyst estimates. Okay. Sales around $2 billion. So they make materials for space, defense, and commercial aerospace. Hexcel. And then there was a relation to Boeing. I thought there was for sure. Right? Maybe not. There is one stock that is about to skyrocket. It recently had earnings. The earnings were solid. 400 plus million in revenue, was about the same as last year, but it beat analyst estimates revenue. And interestingly, there was a segment of the revenue that grew over 10% year over year, which is the defense segment, which is a very stable source of revenue. So investors were excited about that. The ticker is HXL, Hexcel. They do materials for aerospace and space itself. Now with companies like SpaceX, that is a growing market. And then they are moving out of commercial aerospace. So that was the dying market that they had been serving, and moving into defense is a stronger long-term play. The ticker is HXL. Earnings are awesome. This is not financial advice, but let's jump into why this stock could go up a lot soon.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is the earnings, 450 million, about the same as last year. You can see the earnings per share, a little less than last year. You can see the chart, boom, big move up. Slightly missed earnings per share, but this is a huge move up, considering this company, has been going sideways, except for the tariff dip and rebound, for at least, 2 years of sideways. Pretty impressive that it went up at all in 2022 when so many companies went down, but they're not super tech related, so that kind of checks out. And I guess it was a rebound from 2019. So this is definitely a unusual chart to have such a big dip, not in 2022, but in 2019. But this revenue opportunity, this move is one of the better Q3 earnings moves we've had. It's kind of a choppy time in the market. That's clear if you just look at the SPY in general. We went up in September. Jump and Chi disagreed, and then tariffs are not going to happen again, so we marched right back up. We're pulling back a little. This is expected after like 5 gap up days in a row, or whatever you want to call these. I mean, this is definitely a gap up, but these days as well. So yeah, we're cooling off, and now we've had 5 days down in a row, so it's starting to look more interesting again, and it's hard to find setups for that reason, that it's been choppy. So this is a clear setup over this close right here, which is $72. We're basically exactly sitting around that. So it's a very timely idea. A lot of companies, we'll see. And Meta just continuing to sell off after that tax recognition, $15 billion at AWS. Amazon, driven by AWS, 20-30% growth year over year, up a lot, and then up again over on that OpenAI. They're going to buy NVIDIA chips. It's a little bit of a head scratcher because it's like, well, doesn't AWS have plenty of chips? But very bullish to be implicated with OpenAI for sure. Right after Microsoft just came off with that giving back their first right of refusal for OpenAI compute. So they're still going to get a lot of revenue from, they literally have 30% almost of equity in OpenAI, 25, whatever. And they're also going to get a billion or up to 12 billion total of compute spend from OpenAI. But despite all that, kind of selling off, not that interested in that. Maybe there's a buying opportunity down here, but it's not the same reaction seeing from, Apple, which went up as well and then sold off though. And then, the other Mag 7s, Tesla rebounded and looking super solid here. I mean, this looks like it's going to break out again, just like it did back here. So all that to say, this is an unusually good earnings reaction for this earnings season. It's not in a super hot sector, Mag 7, AI. But this is the segment, 180 million, and it is up over 10% year over year. And they have guidance, up near 2 billion. And this is the sales beating the analyst estimate. It's a big deal. It's a growth in the right sector, and they are repurchasing their shares. So that's a vote of confidence for sure. We'll see how much of that additional, it's almost $1 billion in authorization of share repurchases this is a big company. It's a $5 billion company, almost entirely institutional owned, which is another reason that it's very safer to own. I mean, you look at some of these moves recently, QURE is one of them. You know, institutional ownership is a little lower. Look at a company like NTLA, which also is small, you know, billion or so, I believe. Yeah, 90%. I mean, these numbers don't seem like much of a difference. But I do think if you can parse that, you know, you might be able to get something out of it. I'm sort of walking back that statement, you know, immediately as I see that IBM has 60% institutional ownership. I mean, see when you put NVIDIA what it says. So, yeah. All right. Yeah, no, I'm completely almost going to walk back that statement. Unless there's some type of biotech specific connection to institutional ownership. NT LA and NT let's see, oh yeah, RYTM is another one that recently went up. You just have to be careful with these biotechs that are going up recently. Yeah, so that's 99%. Just any sort of little ALNY. When I promise I'll look back at HXL soon, but yeah, this is 100% institutional ownership. I think this is an important biotech metrics. I'm trying to give you guys some alpha here, okay? Because HIMSS, another biotech, just came out with a Wegovy Novo Nordisk sort of go ahead to market their drug. Not a ton of institutional ownership. And, you know, when we look at this drop, okay, here we go. Lower institutional ownership, big drop in a biotech. QURE, slightly lower institutional ownership, you know, below 90%, big drop in a biotech. And NTLA, Intella, the CRISPR company, lower than 90% institutional ownership, big drop in a biotech. So, you know, all of them are for different reasons. This is based on a patient having a side effect. This is based on them doing their results, comparing them to a control trial. This is based on like a marketing authorization sort of disagreement with their partner Novo Nordisk that they have a royalty agreement with, I believe. So different results, different reasons rather, but all connected to lower institutional ownership. So all that to say, biotech is investable, but it's hard to find good ideas right now. So that's partly why I'm looking in the biotech at all. But HXL is the one that's safer. It's not in biotech, so you don't have to worry about that. It does have rising revenue in a stalwart, you know, a sector segment that is going to stick around. So that led to a big move up. And there's a risk level that I offered for you. So that's the idea, Hexcel. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I release that once a month for members, subscribers, in the YouTube post section. And if you want to see these videos before they get released, you know, up to 12 hours or slightly longer before, hit that join button. You also get access to the Discord, which you can get by going to stockscommunity.com. You get a trial, actually. You try it out for 7 days for $25. You can even use code 25 to get 25% off that. So give it a shot if you think that's worth it. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam